All right, time to see what's on Mike's radar. And right now it's real estate, and we're going to go into a little bit of a psychology lesson right now on what makes real estate so interesting right now.
Well, real estate in Canada, for the most part, is probably a very big proportion of people's net worth. Mm-hmm. And we've seen a huge rise in real estate. But real estate's very cyclical. So if I take you back to the late 80s, we're seeing that right now. Yeah. So if you look at the late 80s, we had a huge drop in real estate. Mm-hmm. By some accounts, 30, 40, 50%. And while prices kind of stopped going down in the early to mid 90s, they didn't really go back up until 2004, 2005. So you had a very long cycle of, call it 15, 18, 20 years to wait to get even, right? Then from the period of 2005 to 2025, it's been a straight shot up, even through the GFC. I mean, in Canada, it was just a blip. And I remember seeing statistics that even in the most recent past, it's been about 8 or 9% of our GDP, which is a huge number.
Is that healthy or unhealthy?
Well, I think it's unhealthy by many accounts because, real estate drives a lot of jobs and a lot of industries. You think of general contracting, you think of real estate agent commission, lawyer fees, building supplies, and then everything people buy when they purchase a home, like appliances and other things like that, right? We're seeing a major slowdown. So it looks to us like the peak was in 2022 in terms of prices for residential real estate in Canada. Some markets obviously got much more overheated than others. And you're seeing the balloon sort of, I'm not going to say pop, I'm going to say the air is coming out.
While we're seeing prices drop, we're seeing sales drop. Everybody's on hold right now.
That's right. So just like the wealth effect of stock markets and people's portfolios drives potential spending and a feeling of wealth when your account goes up, it's the exact potentially same thing going in reverse when you see the value of your home going down. If your home equity is part of your retirement plan and you thought your home was worth X, and now somebody's telling you it's worth X minus 10, minus 20, minus 30, what does that happen to your psychology in spending, in helping your children, in your investing portfolio? And how does that transcend into all these different economic actors that travel around the real estate business, right?
Yeah.
So we're kind of thinking about these things right now because we're seeing the volumes drop and the prices drop in real time. We're not sure that it's affected psychology yet, but the other piece of it is the renewal Mageddon, right? So all these people that probably paid peak prices in 2020, 2021, and took out a 5-year, let's say, fixed mortgage at 0.91, 1.3, whatever those very, very low rates were, those mortgages are coming up for renewal.
Yeah.
And we are concerned about how those renewals are going to affect people's cash flows because certainly Canadians' incomes haven't kept up with inflation in many regards. And now you've got this big inflationary push from the perspective of a higher mortgage payment, right, coming home to roost. So that may affect the global psychology of the consumers, and maybe we see that in consumer discretionary spending into 2026.
So with that, because we want to talk about a couple of the stocks that are on your radar with that, are these tied into that, some of the stocks, or these are just stocks you're liking right now?
Yeah, so these stocks, I think, are not necessarily tied into that right now because the first one is, in the food business, and food's pretty recession resistant. And the second one is more related to infrastructure. And as we know, the Canadian government has just launched, hopefully will execute on a major infrastructure plan, and the same thing south of the border.
And that's with Russell Metals. That's what you're liking about
Correct.
for that. And then Premium Brands is the first one we're talking about.
Yeah, Premium Brands. Yeah. So what a phenomenal organization. I mean, they've doubled their revenue in 2019. They've proven themselves to be very adept at not only acquiring complementary businesses, but also growing organically. They now have production facilities and distribution facilities on both sides of the border. They're projected to keep growing their EBITDA at a higher than 10% clip. Their free cash flow, we think, could hit, let's say, close to $8 in the next 12 to 18 months. And the stock today, you're getting a 3% and change dividend yield with a very good growth trajectory.